Hello, everybody, and welcome to our This Week in Crypto call, which we hold every Friday at 7 a.m. Pacific time, 10 a.m. Eastern. We welcome all of you as you come in and want to learn about different assets that we'll be discussing today. We'll be going over things like the ranging happening in Bitcoin, the slight bearish divergence we're seeing with Ethereum. We'll talk about social metrics, weighted social balance for some of the large cap assets that are out there right now. And we will also go over a few special assets like Link, ELF, and a few others. I know that Maxim will be doing a segment himself, and I'll be taking the lead for today with Dino a bit under the weather. But we thank you all for coming, and I will be starting it off with sort of just a general overview of what's happened over the past week in terms of raw price changes and a little bit of daily active address divergence. So I'm going to present now, and by all means, throughout the call, drop your questions, and toward the end of the call, we'll be addressing them and seeing what we can answer. All right, so starting up mine. Okie dokie. So as many of you know by now, we have this screener here. This screener basically allows you to see what's been happening over the last 7 days, 24 hours, or even 1 hour for very short-term intraday trading. Right now, we're looking at 7-day returns. Remember that we can also do things like filters, which I have a daily active address filter that was on. I'm disabling that for the purposes of just showing you the general overview of what's happening here. So over the last 7 days, we've seen mostly a slight decline in most assets. You can see here Bitcoin and Ethereum just had a less than 1% retrace over the past week. We had a major spike for Mobius, which we don't give much attention to. We also had Celsius, Ren, the Midas Touch Gold, and Cybervein, and I think OMG was here somewhere as well. Yeah, here we go, OMG at 23%. So yeah, OMG, for those of you who remember sort of the early week action, they had a major daily active address spike. They had some social volume boosting, and for being one of that was in the very low MVRV range, MVRV being the average trader returns over the past 30 days in this case. They were one of the most ripe for a bounce, and it turned out that they finally rewarded the patient traders that were waiting out and ignoring all of the FUD that was happening for it. So OMG was rewarded. We also had Ren do very well, and I'll be going into that more. It's been a popular asset for the last couple weeks with the bullish divergence that's been showing up on our model. But yeah, overall, it's been a slight decline week, but very much a mixed bag. And that's where, you know, our data really comes into play and is advantageous for people who can identify which assets are most likely to pop when the markets are mostly inactive and kind of going through the ranging type of pattern that it's been seeing lately, with Bitcoin being, you know, anywhere from about 10.3 to 10.9 over, God, I think about the last three weeks, even 4 weeks, something around 3 weeks, I think. And when that happens, like I said, you know, you get a lot of altcoins like right around here that can still make you some really nice returns if you're paying attention to what's happening in the markets and what's happening on chain with daily active addresses and MVRV and what the top holders are doing. And you know, also sort of just gauging what's happening with the sentiment happening in the markets. And I do want to go over the actual sentiment of the major caps, Bitcoin and Ethereum, and I may just give it a little bit of time to load here because I didn't have it up. But what I do want to kick it off with our first model. Oh, if it can click. Looks like my Chrome is doing some heavy lifting. There we go. So for those of you who aren't already part of this model, this is essentially measuring what's happening with address activity, which is the unique amount of tokens being moved on any specific network on a daily basis. And it's comparing that and what it's done historically versus what it's doing now to what price is looking at now compared to what price has been historically. Now, as you can see, we're getting a lot of yellow, orange, and red now, a little more orange and red than green. And that's telling us that overall, the markets that the assets that we're following, that is they're looking a little bit on the bearish side. Now, we see some exceptions. We'll start with Bitcoin, of course. Bitcoin has been bearish in 4 of the last 5 days, with the exception of the 30th, where it was actually 13% above where it should be in terms of address activity. But you can see here, -20, -4, -11, and now it's around -25-ish on pace for how the day will end based on the amount of address activity that has happened. Based on my last refresh, which has just happened, and we're about 58, 59% through the market day. So this gives an accurate projection based on how far into the day we are and how many daily active addresses have happened during that time span. It looks like it's actually updating. So Bitcoin's looking a little better now at about -7.6%, -8.3%. It updates sometimes as I'm speaking, especially if I'm clicking a few cells here and there. But regardless, we're still a little bit in the bearish territory here, and a little bit in the bearish territory for Ethereum as well. I'll show the chart for Bitcoin to give you kind of an overview of what's been happening. Make it a little bigger. You can see that there's a little more red here than green right now. And this is indicating that, other than it looks like about 6 days for the past 3 weeks or so, we're getting not quite enough daily active addresses to justify being in this 10.3 to 10.9K range that we've kind of just been hovering in for the past 3 weeks or so. And because of that, we tend to eventually see some sort of decline, just like we saw back in August. In August, we had, a lot of elation going on, a lot of euphoria, people saying, okay, we're going back to 15K. But meanwhile, this model was telling us, yeah, we're not getting nearly enough daily active addresses, guys. We need to be careful here. And either more address activity needs to catch up with where price went to, or the price needs to fall in order to equalize with the lowered address activity to justify being where it was. And sure enough, when it made that decline from 12K down to 10.2K between the second and the first, it looks like, or first to third over those 2 days, that's when it finally dropped, and suddenly we were back in slight bullish territory, and we actually made that climb until we saw this big red bar here, and that's when we sort of bounced back downward from 11.1K to 10.5, 10.4, and we've been there ever since. Now we've had a little bit of choppiness. We have this green bar that was encouraging, but overall, we are seeing a little more red than green, and I would recommend proceeding with caution on this one. Obviously, Bitcoin's chart here is going to be the most important to really track, because if it falls and it's not getting this kind of support, you'll remember what happened to altcoins right at the tail end of this drop. It was a lot larger than what happened to Bitcoin. So even if alts are looking good in some cases, if Bitcoin isn't supporting the markets, everything can tumble in a hurry. And right now, we're not quite getting this level of bearishness, but it isn't it isn't the most pleasing if you're a bull in the markets right now. You'd rather see these kind of bunches of greens that can lead us to a little, mild, healthy increase. So just something to keep in mind as we go over to Ethereum here. We're kind of in the same range. Obviously, Ethereum's been a little more black and white with what it's been in terms of divergence. And sure enough, the model has done a really good job of predicting where prices are going to go. We had, about 3 or 4 straight months of bullishness that led it from going all the way from a recovery of 140 in early April after Black Thursday happened a few weeks prior, all the way up until August 1st, where we got to 385 and we started seeing our first bearish signals of the last 6 months here. And when that happened, we started to chop a little. We actually increased, which went against the model. and it just made it more and more red. Once it gets into neon territory, that's when you really have to be cautious that a drop could be imminent. That drop ended up happening, and then we almost got back to neutral, and it rocket launched up to 485, and then basically bull trapped the crap out of everybody, and we had that sudden drop, right? And now we had a very mild bounce after we got to 320, back in about 360 to 350 range where we are now, but we're looking a little bearish. And when that happens, it's a little more likely that we're going to drop than we are going to rise. But just keep in mind that it isn't going to be an intraday kind of model here, right? You don't want to react in one day to a very mild bearish divergence and then watch it climb more, because as we saw just a month or two ago, it can climb and just make it more and more bearish. And these are the ones that'll really give you confidence that it's time to sell. So just keep that in mind. I want to show some other assets as well, and then I'm going to hand off to Maxim for a little segment here, and then I'm going to sort of go back to my sections and start taking questions. So a few others that are looking good right now. Fetch. Fetch is actually having a very good bullish day so far. Let's see if I can make it an appropriate size. There we go. Also going to F11. I know you're shouting that somewhere, Max. So yeah, we are seeing our largest bullish divergence in the last 6 months projected wise for Fetch right now. Now, obviously the day isn't complete. It can come down, but either way, it's looking like it's going to be a clear bullish day. And it's been kind of a mixed bag with Fetch in terms of whether it's actually been able to predict immediate turnarounds when these spikes hit. But you do notice that when there are bunches of them, like we saw here in early September, we had 1, 2, 3, and then 4, 5, 6, and the last 3 were all major spikes that were above that top 10% threshold here. And that actually allowed it to jump from about 7 cents to 8.6 cents, so mild there. And then we saw that big downturn after Bitcoin collapsed. And now we're kind of in a range where we're going to start looking for these bunches again. So Fetch, I don't know. I wouldn't say this is a clear-cut bullish divergence yet, even though today is going to obviously be up here somewhere at least. And we're going to have to just play it out and see whether we start getting maybe 3 to 5 straight. And that's where we'll be pretty confident that we'll have successive bullish divergences that can lead to a nice gradual rise again. Another more clear-cut example has been Lend. Lend has been showing up as bullish for quite a while now. It had a particularly good bullish divergence day. Well, it's currently having one actually, and then it was having a good week about a week ago, a week to 2 weeks ago, I should say, where it really saw a big drop in price, but we had this on the 21st telling us that it was 1,225% higher than its expected normal divergence between address activity and price. And sure enough, it had a bounce, had one final retreat, and then a much larger bounce to about 56, 57 cents. And it's now kind of in that 52 to 57 cent range ever since we had this big neon green spike here. Now we're seeing another big one, or at least we're on pace for one to close out today. We're going to see how today plays out. And just like Fetch, a few bunches of them are really what we're going to be looking for. Bunches like these and like these are what really boost the price, as you can see. Another one would be Maker. So Maker, over the past 3 days in particular, has really started to take off with new address activity. And the price has mostly followed it ever since the first one. You can see it was kind of already on an increased pace, and this allowed it to really just pump all the way up to about 574.5 after being as low as 427 just a little over a week ago. So it's been showing mostly bullish signals, and keep in mind that the chart, the axis over here kind of auto updates to make room for these really big spikes. But even these little ones, these are pretty big bullish divergences. They're over 25% in a lot of cases, and they're worth noting, even though these kind of dwarf them. and make them look small. If you're seeing a lot of consistent green, that's a very good sign that an asset's going to turn around. So we've got a very close eye on Maker right now, and we'll probably be making more updates on Twitter throughout the next week or so. Really quick, we've talked about them plenty of times, synthetics and Ren. Synthetics has gone through a little more choppiness. It still looks bullish in my opinion. Obviously, it's had a few big red days, but overall, you know, we look at the last month or so, and it's full of green. And these declines in price just make it more appealing to get into synthetics. Obviously, it was one of the biggest gainers after Black Thursday, and I think it got close to 3x or even surpassed it at one point. And you know, we will be keeping a close eye on whether it can recover and start doing something like this once again. But we'll want to start seeing some more consistent greens like we had during this stretch between the beginning and end of July here. So finally, Ren's been one of the best looking DAA divergences for quite a while. And as you saw on the screener that I opened with, it's been one of the biggest gainers over the past week, mostly due to the fact that almost all the days over these past 6 months have been bullish divergences. We saw some here, which actually signaled correctly that we were going to start declining. And once we finally did decline and we hit, you know, a low of about 16.9 cents, we had the biggest spike we had in, it looks like about 2 weeks, so a modest interval between them. But the biggest bullish spike right here coincided with the bottom, and then we started to rise. We had a slight hiccup here as it declined, and then we got back on track right here. And we've been kind of falling over the past just 24 hours, it looks like. But because we're on pace for another great bullish day, I wouldn't be surprised to see a further increase, assuming this keeps up through the weekend. So we'll have to keep track. And if you don't have access to this yet, I definitely recommend requesting it. If you have a Sandbase Pro email address, just send it over. And you should be able to refresh it yourself with your Santiment API that comes with your $45 per month Sandbase Pro subscription. So make sure to get Sandbase Pro, because I really do believe that this model on its own can really justify that monthly price, and it's made our community quite a bit of profitable trades just by following this and keeping an eye on which assets are standing out, especially during these flat markets when it's difficult to discern which opportunities are out there. So jump on this, guys, and I'll be happy to explain it in further detail. We also have an article on our insights page that I encourage you to check out. At this point, I'm going to take a break from my segments, and I'm going to hand it off to Maxim if you are prepared to talk for a few minutes yourself, Max.
Yeah. Can take. Hi, everyone. I don't talk so often on the calls anymore, not like a few years ago. Where can we start? Well, maybe I'd like to talk about dominance. Yeah? Dominance. And I haven't changed much in opinion yet. That we might see first decrease to 56, 54 if we look in long term. Yeah, so still looking for it, still looking for 54 or 55 for Bitcoin dominance to bottom up there. Even though there are some things for consideration where it might change direction. Remember that we had finalized or finished DeFi cycle. Yeah, it's well, the best indicator where you can see it if you just check very simple. Always check simple things. Uniswap, if we take volumes, which are kind of proxy to DeFi activity. Oh, yeah, I'm not sure.
Yeah, I'm not sure if you were intending to or not.
No, of course I did. Oh, sorry. Thanks, Max, for saying. I think I was sharing the charts. Okay, good that you say it now. Yeah, so back to Bitcoin dominance. Still looking to go down to 54, but from classical point of view, the current retrace for Bitcoin dominance is good enough. So we could grow from here. Yeah, ideally, as I say, I like to see at least 50% correction, or 61 is even better if we get so deep. So 54 is still in play, but we're in a zone where it's according to the book how you analyze it, it's a kind of could be enough. Now, for why I'm thinking it's possible Bitcoin will take over or might take over, because the DeFi cycle is done. Generally, DeFi cycle is done. We've seen this huge transaction fees, or you can see on my screen now. That was a transaction volume on Uniswap protocol, yeah. And at the same time, if you check on some other charts, I will not show it now. And what were transaction fees? They will coincide with this. And we've seen pumps, 5 waves, and all major tokens, be it Kyber or whatever you call, or Aave, Compound. They all have their pumps. And now it's copy-pasted by all others, by Binance and I don't know, in Neo and projects you forgot, say coming up, and they will want to have their DeFi. So the current cycle is done. The next one might come and might come even stronger. And we're thinking in our team, will it come? And if it comes, how you can track it. So, and by doing analysis, we try always to keep it simple. That's why you have simple model of price DAE. It's very simple, straightforward. For Uni or for DeFi cycle, what we want to see, if you put here a resistance line from top till this lower low, so you will see like there is a line. We need to break through this line. Then you can say, okay, there's a trend coming back to DeFi. Or if you take the next, go to decentralized exchange in term Kyber. So you can say, okay, around 10 million looks like a threshold. We need to keep above 10 million trading volume, at least for 1 week. Then you could say, yeah, there is a chance for all DeFi hype to come back. Yeah, so these two things. Uniswap trading volumes coming back around above 300 millions, and Kyber staying above 10 or better 15 millions for at least 1 week. And we're building now to bring on Sand-based platform, but it's not there yet. Maybe next week, maybe it will be there. And this, coming back to the topic, will Bitcoin suffer more if DeFi is about to push next time? Okay, then Bitcoin will definitely suffer more. Or if it's enough and it's now the time for Bitcoin to take over, well, theoretically it can. So I hope I gave enough food or enough indicators to pay attention to. And just to finish it, another good behavior or crowd sentiment attention. If we had something similar to what we have to BitMEX yesterday, when there was for some time at least some sort of panic or fear that, oh no, it will hit all exchanges and Binance is the next, I don't know, FTX or you name it. There are some changes which definitely had some gray illegal history. So you could say in such an environment, having some level of panic, it's good for market. It can dump more and it can recover. If we're about to get similar conditions for any of DeFi protocols, I don't know, imagine something comes and I'm just making fantasy, like I don't know, Maker is being claimed for whatever, they're doing illegal things, and then of course market will dump heavily, then it will be good condition also for market to turn around and grow. Yeah, it's contradictory, and this is exactly why it works, because most people will be afraid or scared to go into the market, and this is how typically market turn around. But I don't know if we get this kind of event for DeFi space or not. But if we have, keep in mind, this is a good time to be in the market, come back, and you can start accumulating. Or you keep track of this matrix I just mentioned. Now, looking in generally for Bitcoin, Ethereum, it starts looking better and better. As you see here on the chart, and it's like actually it's a chart, it's template on our main platform on Sunbase. You just go and see this compares the volumes. And we like to use it when we just want to see, okay, has the market conditions in general changed or not? So the market conditions were quite poor because of, let's see, on-chain, the elective addresses were not good, were not looking good for Ethereum, were constantly going down and down. Yeah, as you see, all time starting from end of July, beginning of August, everything was going down. Yeah, so as a market here from April and May was going up, till some point of time network activity was growing, but then partially because the price of transaction fee became too expensive, activity was starting to die down, so only big participants could interact, and eventually it was too much, so network couldn't grow anymore, so everything went down. Now we see it's about to change, or it's trying to change. Yeah? You see the spike on 18th September because of big part because of Uniswap distribution, but not only. If you look carefully over the time, which is on the screen, you will see it was going up, kind of going down, then brought price down with it, and now it's trying to stabilize and increase. This is what Brian also mentioned. I would definitely, and I'm, everyone is now a team who is analyzing analytics team. We are checking these charts on a daily basis. See, is it true? Are we really trying to recover and start increase network activity again? And especially when the price start increasing. Yeah, because last 2 weeks, let me open it, you will see. Yeah. We saw the same pattern. Yeah. The price tried to push from, I don't know, what was the last week, from 300, 310 to 360, even, yeah, 300, almost 70. But network activity could not pick up with it. So again, going down. Yeah, not so many people able to participate, yeah, be it too expensive or lack of interest.
Yeah, and Maxim, you wrote
yeah.
something earlier this year about how we really try to find validation in a potential bounce and rise in these when we have daily active addresses, volume, and social volume all together, right?
Yes. It's
right now,
my personally, it's a favorite way of catching major moves which happen like every 2 or 3 months. It's simple once you understand it, and it's only 3 metrics, and it prevents you from doing too many activities, which each of us, me including, we try to be active. But when you look into metric, you just say, okay, I don't do anything. It's not clear. Market hasn't turned around, and we are looking to it, and it shows good signs. By all means, it shows good signs. So we're very attentive to it.
Yeah,
okay, Brian, continue. You want to say something?
Yeah, I was going to say, so it's good right now that we're seeing volume bouncing over the last couple of days, but daily active addresses, unfortunately, hasn't kept up yet. And then social volume has been a little bit down as well, and I'll show that off too after your segment's over.
Yes. And
right now we've got only one of the 3.
Yeah. And daily active addresses for Bitcoin, Ethereum, it's one thing. It's like kind of majors or let's say crypto blue chips. So you look into them separately, Bitcoin, Ethereum, and then independent. It can move independent, and it was quite independent in the last 3 to 6 months. Altcoins, which were part of DeFi, they moved on their own. Yeah, that's why we like this chart, because it shows the price of like 0x or OMGs. It just move on their own, and they move earlier and they move faster. So quite frequently, they can show you what might happen next. And 0x doesn't look so interesting at the moment, but OMG, for instance, looks much more interesting. We had a pretty healthy price structure, which went to the previous level of around 4. As expected, it couldn't break it from first time, went down, but the daily active addresses, wow, they spiked quite a lot. So OMG on my list. I'm looking carefully to it. The same go for Maker. Yeah, Maker, if you know it or not, they start onboarding a lot of collateral type. It's kind of more risky, but more risk, more reward. The protocol could fail, but if it fails, you will have a good opportunity to buy even much cheaper. What is good to see, it again, it's a volume of Maker is growing, and I think I can compare Maker daily active addresses. And it's like skyrocketing, yeah. So it's very healthy sign. So it's very, very nice to. This is what you want to see. If you want to see. So now you need to for some correction. It will definitely come, and make it happen so like every time. And then you decide OMG or make a Kyber network. It's a kind of no, not yet good. The elective addresses, I don't see much life there yet. Volume is okay, but the electricity is too weak. Maybe they need to come up with some nice, more exciting activity. Can see. Let me see dev activity. Are they building anything actively? Well, not much. So I don't know. Priority 2. Now REN is also having good sign. Of course, volume, but volume also keep. It's like we don't use volume alone because market makers wash trading. Nothing has changed in crypto. It's still very existing. But the active addresses they're showing a good sign. We came back to a healthy level, which was before the last pump, which is around like this level. Yeah, 700, 800 directive addresses. It's quite good. Good to see. So REN is okay. Compound, I think, still trying to find the bottom. And Avaland, yeah, not bad, not bad. But daily active addresses, I would wait for one more week to see, is it really the bottom? Because if you look in this chart starting from end of August till now, it still looks like declining. And this is my summary. I personally also pay attention to two more tokens, which one is Uniswap. So I need to take a small time frame. Yeah, I like a lot the fact that it's most of, as you see from our Uniswap dashboard, and if you don't know, we have market Uniswap on the main platform. Under market Uniswap, we have a very detailed view on what's going on in Uniswap token distribution, who is moving, who is accumulating. And we were about to release on Monday even much more. I've seen that many of top claimers, they already, those who wanted to dump, they dumped, but there are some who even accumulate. It's a good sign. Because if they dumped on all this range, it means there were people who bought it and they will not sell now. Those who recently bought, they will not sell now. It's not so easy to bring them to depression or to take time. So they will keep, and it means they will not sell unless it go to $5 or $6. So right now we're around 4. So the growth to 6, relatively simple game. And if we go to 3.2, or luckily if we go to 3, this will be really present. So you can do theoretically 100% and with not much emotional pain. And Uniswap is one. And of course, iFi, it's just because they're like innovating and because they're solving the real problem with Ethereum, too expensive interactions, and they kind of aggregate, and these pools are moving allocation for you with lower gas fees. But just prices was too expensive. Now it's getting better. And if it's get to 16, especially 12, that's, in my opinion, quite a strong buy. Yeah. in my opinion. But you remember, not investment advice. Just I look into these tokens, Uniswap and DeFi. And those who are on our chat, you know what, since 2 or 3 weeks. It's been my mantra saying preserve your wealth and look if we get good entry price for IFI in the Union. And IFI we are very close to it, and Union also getting closer. And of course the tokens I mentioned. Yeah. Okay, Brian, I think I'm finished.
Yeah.
Unusually long talk from me. Yeah, typically I just hang around and don't say, but yeah.
Yeah, no worries. This was quite interesting. It's always nice to see an integration of technical analysis to go along with our metrics. And you know, I learned a bit myself about what's happening with a lot of DeFi assets right now. Someone asked if in the chat while you were talking, they asked if we can look at wallet active addresses used exclusively for DeFi and whether or not it's increasing.
Yes.
And I believe our Uni dashboard sort of answers that a little, right?
A little, but just need to wait 1, maximum 2 more weeks. We're releasing next week something where we say what is distribution of stablecoins, especially DAI and Uniswap across top protocols, and with how much is being moved either to it or from it. And maybe the very next step we'll do is who are the top holders or accumulators in these protocols. And with specific reason, when the market is going down, when the market is bearish, the only people who can really move it up, it's the whales. So the first thing you want to see where whales accumulating and putting their money. You don't want to be, or you want to be, and I want to be too, the smartest guy on the planet, but it's difficult. It's easier to be, how to say, you understand how things are working on this planet. The things are working, the whales are moving the market. So we try to identify in which protocols there are signs of whales being accumulators. It worked well in the last cycle. We used quite some analysis, and if you read our insight, you will see it. And now we're trying to build more extensive, or let's say across many assets, whales identifiers. Yeah, so you can see, okay, can we say that in Compound or Uni or IFI is a wealth accumulator taking place, or is it still just people are selling against market makers and order books, but there is no accumulator of big players? Because in some tokens, what we saw just 2 days ago, we're accumulating, or we're analyzing, there is no accumulation yet. So I say, okay, we don't buy yet. And once situation changes and you see big guys starting buying, you can expect they will find a way to pump it up. That's why they're whales. They know how to do it. We are small fish. We cannot move much market.
Yep. Well said.
Yeah.
All right. Thanks, Max. I will. I'll start sharing my screen again, and I'll show some more things that are going on in the markets here. All right. Now, really quickly, I wanted to remind you guys that we have this thresholds cross chart, which is a really good way of understanding the macro movement that's happening in given price ranges. And right now, obviously, we are between that 10,000 and 11,000 mark. And the most polarizing over the history of Bitcoin has been around the 7,000 and 8,000 areas. This isn't to say we're going to fall back to this, but just keep in mind that if we do retrace for some reason, these tend to be the areas where we're going to get the most bounces based on history, just because, especially if we drop below 8,000, we've crossed above and below it a total of 35 times in the course of Bitcoin's history. And this would be around the area that we would likely see a lot of sentimental polarization, people that are targeting these areas to accumulate more, and also plenty of people who are fudding out in terms of whether it gets to this area. But right now we're kind of in that mid-range of 10,000 to 11,000, which we've been in for the last 3 weeks, and it'll likely, in my opinion, have a little more possibility of dropping below 10 than crossing 11 in the short term. But obviously in the long term, that won't be the case. For Ethereum, we're actually in the most polarized price range in the course of Ethereum's 5-year history, where between 300 and 350, where we are now, we've had a total of 43 times that it's crossed above or below that 300 area. So if we do drop below 300, I do believe that we will see a lot of polarization, a lot of people who are viewing it as an opportunity to buy. And if the fundamental metrics like address activity or NBT or MVRV indicate that it's a likely spot that can bounce, we'll see a pretty big bounce if we do drop below 300. If all of the stars align, and what Maxim said about social volume, daily active addresses, and transaction volume are all looking on the bullish end. So just keep this in mind, and if you want access to it, I think it's a pretty nifty model to just give you a zoomed out perspective of the markets. I also want to show social balance in terms of what the combination of positive and negative ratio comments are on Twitter, combined with the amount of overall volume that's being output by comments related to Bitcoin and Ethereum. And as we're looking at here, we see that Bitcoin is actually in close to 2-year lows in terms of negativity surrounding the asset. I think a lot of people, especially around here, that got faked out and saw a big drop from 12K, are not happy that we're in that 10 to 10.6K range right now. And due to that, there's a natural assumption to assume that it's going to keep going lower. But historically, based on this history, we've seen that the lower the weighted social sentiment is, the more likely we're going to see a big bounce, just like we saw back in mid-July when things were kind of in that low 9K range for quite a long time. And then there was a sudden bounce. As a lot of people thought it was going to go lower, it ended up doing the opposite, which is often the case in the markets. The path of least expectation tends to come to fruition more often than not. And right now, the expectation is that we're going to go lower. And if we're basing everything purely on social sentiment, which you shouldn't, you should definitely combine it with on-chain and other, analysis like TA that Maxim just showed. If we were to do it just on social, it would appear that the crowd thinks we're going to go drop below 10K and get into 4-figure prices again. That being said, when the crowd believes that, it means there's a higher likelihood that we don't and actually go higher. So from a social sentiment standpoint, this is a good sign for bulls. We want to see people doubting Bitcoin's ability to jump up again. And right now, that's exactly what's coming to fruition. Moving over to Ethereum, it's a similar situation, not quite at the same 2-year lows, but close to it. We're at about 70, looks like the latest date that came in is about negative 68%, or not percent, negative 68, 0.68 below the normal mean that's expected for this metric. And right now, this one's a little more justified because the on-chain metrics are looking a little more bearish, and there was a much steeper drop off when it got all the way up to 485 and is now in that 340, 350 range. Yeah, we definitely want to keep an eye out for Ethereum as well, because it's very negative, and you can see that when it got to really negative spots here, that's when the price jumped. Negative spots here, price jumped. Negative spots way back here, price jumped. So Ethereum's been quite reliable, arguably even more so than Bitcoin for this metric. And I definitely recommend, if you have a Sandbase Pro subscription, head over to graphs.santiment.net/social, and you can explore for any of our assets and plenty of different platforms: Telegram, Reddit, Pro Traders chats, Twitter, Discord, and even Bitcoin Talk. So really cool option here to sort of understand what's happening socially. Moving on to MVRV. I really love 30-day MVRV in particular. I think it's a really good mid-range indicator. Make it a little bit bigger here. Basically what the blue bars are showing, if you can ignore the red ones right now, the reds are basically just showing the actual returns over the last 30 days for several different assets that we're showing. But the blue is showing what the average returns are for the average investor over the last 30 days. This includes all the FOMO and FUD and positive and negative trades they've made to buy bounces, sometimes rightly, sometimes wrongly. And it's a zero-sum game. So over the course of time, no matter what time range you're looking at, whether it's 30-day or 1 year or 10 years, MVRVs are going to balance out to be around zero, because there's going to be kind of that zero-sum game factoring in. And right now, almost all of the altcoins are in negative territory. You can see even Bitcoin here over the last 30 days is just slightly in negative territory, but it hasn't really been too, it's mostly been neutral for average traders, whereas you look at something like ELF, Chainlink, Band, Kyber, or Fetch, these five in particular, I'd even say Status and Raiden, anything below 15%, I think makes a pretty good case as a bounce candidate, but it usually won't do that unless the crowd is ignoring it. So I like to combine MVRV with social volume a little bit, and of course address activity too. ELF, for example, I believe the reason that it's so low, and I believe anything below negative 40%, is usually about the range that it's as low as it can get for most altcoins, especially over just 30 days. It's tough to get much lower than that unless Bitcoin is absolutely falling off a cliff, and then altcoins are all going to be really, really low. But ELF is almost at that absolute bottom threshold of around negative 40% that's due for a bounce. And I think it happened due to the fact that it had that one big day where it jumped around 150%. It could have even been a little more. I don't remember what that final number was, but it was around 3 weeks ago. Yeah. So right here, you can see that address activity lined up perfectly with its huge surge going from 9.9 cents on the 9th to 24.1 cents. So that, yeah, that was around 150% gain, give or take. And after that, I think a lot of people bought in this range, hoping for another mini bounce, and it would go like that. Instead, it just fell right off a cliff and came right back to its same prices, almost exactly. It got to about 9.1, etc. But yeah, I believe that this is why the MVRV is so low for it, just because a lot of people got very bull trapped. And it looks like eventually this is going to be a prime opportunity for a bounce, just because MVRV is indicating how many people are underwater and therefore have a negative sentiment toward that asset. We can also look at Chainlink, and I have a graph open for it so I can check it out in further detail for you guys. Basically what it's showing right now is, even though address activity is declining, so is price. So it isn't in horrible bearish divergence territory, even though it is a little underwater. What I am saying is that average traders, if I were to get rid of daily active, I'll just highlight it here. MVRV 30-day is showing that on the latest day, just as the model shows, we're at about negative 25, negative 24.5% in the negative for the average 30-day traders. And that's telling me that historically, we're going to get a bounce at some point just to get MVRV back to about even at that 1.00 area as it shows on Sandbase. We could even zoom out a little bit further. I want to show like.
Can you show directive deposits? Directive deposits, and also select again 6 months? Because it looks good. Like you see with every new drop, less and less network activity. It means like most of people already dumped. There is not so many people to dump anymore.
Yeah, it looks pretty similar to what is happening with DAA.
So it's good. It's good. It means all the spikes in directive deposits and active addresses, which correlates a lot, means there was some level of panic and fear among Chainlink holders. Remember, many of them bought very cheap. So like every new dump, they say, okay, now that's it. I want to go out. And yeah, it looks good. It looks good. Yeah.
Yeah, I mean, if the Link Marines are fearful, that's a big deal, because they're notorious for being very stubborn, right?
Yeah, whatever they say, metrics say that quite some of them dumped.
Right. Right. So, I mean, based on address activity and active deposits, it looks like we're, a little bit in the FUD area right now for Link. And I think that could actually be a good sign for at least a short-term bounce coming up in the near future, assuming Bitcoin stabilizes and can stay in the range that it's at right now. So keep a close eye on Link. I think that MVRV, as I was showing initially, can be a really good sort of indication as to where people stand in terms of their sentiment related to an asset. And right now, Link is looking like one of the most negative, unjustifiably. I think that still, Link has the potential to get back to here at some point, just like many of the other ERC20s that we often cover. So, since there isn't a major fundamental reason for people to be this negative, that's when it's a really good time to strike and consider opening up a long. Obviously, not an investment advice, and you have to do your own due diligence as to which metrics you value the most. But we do believe highly in MVRV 30 days. I want to also show ELF again. This is exactly what I was talking about on the other chart. Its MVRV is way down, almost to negative 40%. It would show. We're going to change this, guys. So it's actually going to show a percentile, but right now it shows as 0.64. So what you do want to do is just go 1 minus 0.64 or minus 0.64 minus 1 to get you that negative 36%. Basically, the further it is below 1 on Sandbase, the more of a buy opportunity it shows. Whereas, when it was up here at the local top back in June, it was at about even, but right before it was about plus 15%. You can see when the MVRV got really high in August 21st, it was at 28%. And look at that, local top formed. And then the biggest, of course, the MVRV 30-day was at plus 36%. So obviously traders over the 30-day span weren't able to capitalize on the plus 150% out of the blue that really caught a lot of people off guard. But people did get up plus 36%, which is a telltale sign that we're heavily inflated and greed is probably taking over. And that's exactly what happened. And we eventually normalized back to that even area and then beyond because of the fact that so many people got bull trapped up here. I want to also show what's been happening with top holders. I'll keep this pretty brief because it's been a relatively tame week. This chart here is showing just what the top holder has done over the last 30 days. You'll see that the vast majority of them have mostly just been break even, but you'll see that Ethereum, for example, I believe this is actually the wrapped ETH address, as someone on Twitter pointed out to us last week. It is up 2.68%, 2.69% over the last 30 days in terms of tokens that it's accumulated. That's actually quite a bit when you talk about how large Ethereum's market cap is. You also can see Maker here. Both myself and Maxim have already talked about it on this call. Maker's top holder is up 5% in tokens held on non-exchange addresses. That's a big deal as well. The only other movement we can really note is Kyber Network at negative 1% and Fetch at about negative 1.6%. Really not a big deal there for the top holder of those respective assets. But if you look at something like the top 10 non-exchange addresses, you can see that Fetch actually has seen an 8% accumulation on these 10 addresses over the last 30 days. And that's pretty massive. That's a very large accumulation over just a month time span. And it gives us good confidence that those with the most on the line are content with keeping their tokens off exchanges and therefore will deal with any volatility that's going on because they're confident in the long-term upside of that asset. You can also see Ethereum here at about 2.5%, probably likely very associated with that top wrapped ETH holder. We can see Maker. We see that this orange line here, ELF, it's been bouncing up and down, and now it's back up. But I don't pay too much attention to volatility like this. I care more about cumulative increases over time, like has been going on with Fetch. And then lastly, with the top 100, You can see again, fetch is up in that 8% range. You can see the same bouncing going on with ELF. And over the last couple days, it looks like storage has made a bit of an increase in their accumulation. So keep that one in mind. I think it actually had some pretty good bullish movement in just the last 12 hours. So keep in mind that storage is also one of the top 10 development activity assets that's consistently been showing up on our monthly report. And you'll see our new monthly report for dev activity coming out in the next few days, actually, which we post at the beginning of every month. You'll see it on our insights page. We'll also post it on our Twitter. So nothing too extreme on the last week for top holders. I also want to show token age consumed, which is mostly dormant as well. Token age consumed, for those of you who don't know, mostly indicates what amount of tokens are being moved multiplied by the age in which those tokens have been sitting dormant in their respective addresses. So it puts an emphasis on tokens that have been stagnant and just sitting in an address for a long period of time. And when they move, that's when you'll see these big spikes on this model, which is indicating the top 5 spikes per these 10 or so assets that I track on this model. And you'll usually see Ethereum and Bitcoin on the low end, but they are there. Like Bitcoin, for example, had a big one on in the end of July, which corresponded with a short turnaround a few days later. That's typically what's useful about this metric. It anticipates sudden price directional changes. So if a direction is moving upward and a big token age consumed spike comes in, then it'll suddenly change downward. If it's going down and then the token age consumed spike happens, it'll usually shift positive. But over the last few days, nothing really of note other than Maker, which was moving down around the end of September. And you saw this big spike, and over the last couple days, Maker's actually been making a nice move upwards. We had Bitcoin actually that had a pretty big spike as well. Let me see if I can open that up on Sandbase because I want to investigate that a little bit more. I'm going to take this off. I'm going to go to age consumed. I want to see just the last month here to really zoom in. It looks like this, was it this one? Yeah, it was this one. This one came on a decline, which is a sign that the price was going to move upward. And sure enough, it did so. Let me zoom in a little more. So we were at about 10.76K and we fell to just a little below that 10.72K, had the big token age consumed spike happen here, as well as a bigger one here. And in both cases, they came at local bottoms, which foreshadowed upward movement. And this one obviously foreshadowed it going all the way back up to almost 11K before we had a very minor token age consumed spike that ended up being a major foreshadower in the drop all the way back down to 10.4 and eventually 10. Yeah, it was around 10.5. And then another spike happened here as it rebounded, which indicated another sell was going to happen, or a drop that is. And then over the last couple days, we've just seen minor ones. So it's mostly dormant right now, but you'll want to look out for these big spikes here that are really going to foreshadow directional changes. And I really think it's interesting to keep a close eye on that token age consumed model. That'll just help you quickly identify which projects are getting outlier spikes at any given time. And Maker, of course, had the last one on a decline, as I said, that sort of foreshadowed its upward movement it's been having the last couple of days. It's about an hour after the call right now. I'm going to go just a little bit over to answer a few questions. I know we haven't had a ton, but I did see a question about Decred and Litecoin. I am going to quickly go over them. Decred, as many of you know, is not an ERC20, so we're going to have limited access on that one. But I believe Litecoin, because it is a non-ERC20 in the top 10, we do still have some good on-chain metrics for it, including daily active addresses. I'll ignore age consumed for now. Actually, age consumed does look interesting. Let me show that really quick. You can see here we had a recent age consumed spike. Literally, it looks like about 8 hours ago. And this age consumed spike ended up coinciding with the local bottom, and now we're bouncing off of that. So this is a very recent spike that is indicating we could have some more upward movement coming on, assuming that our daily active addresses look okay going into the weekend, and assuming Bitcoin stays in its 10.5K range and doesn't drop. So Litecoin has been in the bullish divergence range for the daily active address metric for quite some time, actually. I'll prove it by showing you our model. And this is basically measuring the last 4 years of data for Litecoin and gauging what its historical expectations are for bullish versus bearish address activity. And going back before 2020 in particular, we were getting a pretty severe lack of daily active addresses, still coming off of like the last year or two from the big bull run where Litecoin was well into 3 figures. We had a big drop off there, and ever since Black Thursday, we're getting a pretty impressive sort of increase in address activity that I think will eventually show us another nice increase like this against Bitcoin. I think Litecoin can actually lead the way. As many of you know, it works as a test net for Bitcoin, and oftentimes before a big Bitcoin movement upwards, you'll see one for Litecoin first. So we really want to see more bunches of heavy bullish divergences like this that are going to sort of lead the way. And we're already getting a little bit of an increase that's mostly just been tracking with Bitcoin. But considering that token age consumed spike that we just saw, I wouldn't be surprised if we see a little more of a decoupling in the next couple of weeks. Just keep in mind that Litecoin is a very negative sentiment asset in terms of how the crypto community sees it, and that can limit its potential sometimes just because it's so scoffed at these days, despite still being a top 10 market cap asset. So nice to see with Litecoin. I think it has some upside based on just a few metrics that we just looked at. The other question was about Decred. Let me see if I can open that up really quick. Now, most likely we're going to be limited to volume and social volume for this, and I'll see what we can find here. I have not looked at Decred in quite some time, so bear with me while I try to see what might be standing out. It looks like volume is continuing to decline. If we look at, we'll go all the way to the last year to really get some perspective. We had a massive drop off between, it looks like July 5th and 6th, if I have that correct. Right around, oh no, a little earlier. From the turn from June to July, there was just a sudden drop off in transaction volume. I can't tell you why. I don't know the fundamentals of DCR enough. So Max or anyone else on the call, if you do know, feel free to chime in. But we do see that social volume kind of peaked right around the top of price that happened on August 22nd, when the price was at $20.90. And social volume really started to see a sudden drop off to pretty low areas, where we're now at almost half that price at 1156, 1162. So with it being ignored, that's a slight bullish sign for Decred. I don't know if it's enough to really get us excited about a big bounce, especially with transaction volume continuing to decline. And if we look at like just the last 3 months to zoom in, we can really see that transaction volume is not really doing much. It's staying pretty flat right now, as is social volume. Social volume is actually looking like it's close to its 3-month low range if I were to average out a lot of these big bars compared to, or small bars compared to these larger bars here. So in terms of how bullish I would say Decred is based on some on-chain and social metrics here. I don't think that there's too much to get excited about. That being said, I don't think it looks particularly bearish either. I think it's mostly just kind of staying flat right now after it had its big surge in volume back in June. So not too much I can really say about it, but if you do want us to look more into Decred, I'm always interested in checking out assets that we don't typically look in more. So DM me on Discord or drop some questions or comments in the general channel, and we'll try to get to more. It looks like there aren't really too many other questions on assets, but if anyone else on the call wants to wrap up with a few comments, we can sort of start closing things out and move things over to Discord.
Yeah, looks like that's it for today.
Yeah. Well, guys, I thank you all for joining. I appreciate the nice turnout once again, and for all of your support on our growing platform. We'll have more updates soon with more DeFi metrics in particular. I know our developers are looking at, and yeah, we will see you all next week for another edition. Stay safe and have a great weekend, guys.
Yeah, have a good week, everyone. Bye.
Take care.